Okie dokie, this is Coach Mike. Going to start going over the focus group watch list of charts and discussing a little bit of what I sent to you on the focus group spreadsheet. First off, Apple. Apple has earnings Monday after hours. Premiums have a slight inflation to them, not too bad, but has me not really wanting to play the earnings. You'll see that consolidation range we talked about in the last couple weeks market overview videos or focus group videos. We broke down below that on Wednesday, Thursday, and still closed below it on Friday. I had a decent little up move Thursday and Friday on Apple, but you see my Fibonacci target 99.25 is one that was derived from the low of this up move to this high and to the bottom. So I'm not quite convinced that we're going to really make that big of a move just yet. I'd rather let the earnings happen. I think we've got plenty of room to the top or bottom based on Apple's earnings, and we will find a play after the earnings. Caterpillar has earnings on the 23rd pre-market. That's Thursday. And even though I think Caterpillar is trading well according to our last series of trade plans, remember we had this low point here marked as a target. It went just a little bit below that. You could watch Caterpillar if you wanted. I think with earnings coming up, it might be a little bit too risky, but after that big of a down move, we could see continuation up to, we'll say, $100.67, which would be a simple target for it to replicate this up move after this down move. But if the earnings aren't good, it could turn on a dime and kind of hurt you, maybe even come back down to the $88 range. So Caterpillar with earnings makes it a little iffy. CVX through this recent fall has created some downtrends for you. Also, just based on this low, high, and into this last down move low, you see we closed pretty much right at a Fibonacci extension target, 20 cents above it, with a bit of a doji candle on Friday. Oil's been just beat up as a commodity across the board, and it's really hurt these stocks. So if oil starts to do well, you could see a decent swing longer term, maybe even up to 132.48. Earnings for this aren't until not this upcoming week, but the week after. And things have fallen hard enough that you have to kind of think there could be an up move at any time. What I would be watching for on CVX before I even plan to trade is reaction to any one of these down trend lines. You see there wouldn't be very much room to the upside before simply just hitting this and maybe pulling back to give another short trade. So with CVX, I hate to say it, another one I'm on the sidelines with. Facebook made a pretty good move on Friday, especially late in the day. If you were watching, it shot up. I swear it shot up $1 just in the last 30 minutes. There are a couple points, though, to be watching for that could cause this to pull back and could verify the entry into a new trend. Got the 76.96. We've got a parallel from these two bottoms run off of this top that you could hit and be in a down channel. Because of that, obviously, you can see there's not much room to the upside before what it could verify to be, a change in trend, and we don't want to get stuck in that. So, right now on Facebook, as far as new swings go, I'm just kind of holding back. I've got a swing going for December 20th. We've paid for that position with puts plays we made over the last couple weeks. But aside from that, I'm not really wanting to force my way into anything for a swing trade on Facebook at this time. Facebook on the 60-minute chart, one that we watch all the time with swing points, that gap and move on Friday was a little bit unexpected by me personally. It really just got you into these prior swing low points just a tad bit higher. What I would be watching for on Facebook, which would make me more interested in trading it, is for a lower high than these consolidation points here, and then be looking to the short side using at first this swing low point and then the gap fill as target areas off the 60-minute chart, which would have us trading early in the week, October 31st options, and then by Wednesday, if it hasn't happened yet, wanting to move out that following week. First Solar, this is one, to point out from last week's focus group spreadsheet in focus group video that I said could come down to this weekly trend line from when it had made its low back in 2012, it looks like. Anyway, we did get a move that came real close to that trend line, bounced off of it. I do believe that could give us a run up maybe to about the 63.76. Now, a swing trade on it at first is going to have a little bit of added risk that you may not be comfortable with. You may be better off waiting to see if the weekly candle turns out to be an evening or a morning star. But what you wouldn't want is for the third candle to replicate the first candle in that 3-candle pattern and get you all the way up to your target. So if you decided to buy based on this trend line right here, understand that you're $3 off your low. That is going to pose extra risk. But at the close of this upcoming week's weekly candle, you'll be able to use the close of last week's candle as your stop and be able to move that up, $3 or so, $3.10. And I do think at first that 63.76, or maybe even, to retest this failed trend line from before, may be a long target on that. And again, a lot of this will have to do with how the markets hold up for us. Sadly, if we see it fail this trend line, I think we've got a pretty big time short opportunity, which would actually be about $15 down to 36.71 area. So I'd be watching for that as well. GLD, I know there's some people that got in some calls down off of this bottom. If you didn't, what I want you to remember is this horizontal channel we've been following on gold for quite some time, that within this channel is giving good strangle plays. You're actually about halfway between the low end of that channel and this bottom area. I think you could look at November or December monthlies, like a 115 put, 122 call, even money in each side. Basically, if the market does bad, gold should go up. If the market does good, we could see a bit of a pullback in gold. What I'd really be looking for on gold is to see if any pullback it gave an overall higher low than this, but it could end up resulting in profit on puts that could also later lead to profit on your call side. So I don't think that strangle would be a horrible idea. Goldman Sachs, GS. GS had really good earnings last week. They completely blew out expectations for all avenues. They about doubled the EPS estimate and had over $1 billion higher revenue than what the Wall Street estimates were. But again, proof that no stock is stronger than the markets. They reported their earnings and it fell like $5 because so did the markets. It did shoot up pretty nicely on Friday. You see my Fibonacci points here and that lower end target. Remember, we had played some November 170 puts and also some December 160 puts, the same ones I have listed as potential trades. And really that's based on its ability to hold below this 50% line, 177.53. But in all reality, because the earnings were so good, you'd have to expect that if the market allowed Goldman Sachs to run, we could have a couple high side targets that we'd see, 180.43, 192.74. I've got a couple associated calls plays on the spreadsheet for those two targets. And for those puts plays, I really believe the swing low point, this little M that was made on the daily chart, you might see that retested right around the $180.70 mark. That would still be okay for your puts, even if you've got puts and they would be down if it went up to there, but still could be okay overall for your puts. So I would be looking for Goldman Sachs. Those of you that were in those puts plays with me that we did phenomenal on, we also had calls as part of the strangle. Those calls are actually free contracts now because the puts made better than 100%. So, I'm not too worried. But what I may end up doing is adding to those if we continue to the top side. Because if you really think about it, if I add to those calls positions, my average price holding free contracts on them right now, if I were to add the same number of contracts I already have, my position average would literally be half of whatever I pay for it. So with that being considered, from the time I buy, it could move downwards 50% in the price of the calls before I'd lose any money. And I think that's a pretty fair bet to be making. So that could be what I look to do personally on Goldman Sachs. But again, I want to stress that if the market allows it to move up, it's got all the reason fundamentally to do so. So I think Goldman Sachs could be one to definitely have an eye on. Lockheed Martin is going to have earnings Tuesday pre-market. Last quarter I did an earnings play on it, right over here, and it worked really good. We made some good money on it on a swing. You could possibly do that with the November monthlies. My only problem is, just like you saw last quarter, where it really didn't gap up that much, and you could have bought it at the open after the earnings, whether it missed or beat, and played that direction for a few days. I think I'd rather look at this Tuesday morning after the earnings report's out, and from that point be able to trade alongside without the risk of maybe being wrong on whether or not it beats. And we've seen that over the past few quarters where you had opportunity on beats and misses to trade according to, we had an earnings miss over here, you could have got in at the open, played the down move. You had an earnings miss over here where you could have got in at the open and played the down move. So for me personally, I would rather look at that as an opportunity rather than trying to guess either side to play for the earnings. So gonna wait till Tuesday, gonna see the earnings report, and then make my decision on a trade. UPS, I don't like this series of lower highs, lower lows that we're seeing on the daily chart. It does have earnings on the 24th pre-market. And sadly, I'm not interested in a new trade at this point in time. It's made a decent up move from the last low, but with lower highs, you never know when it could turn around. I'm pretty much going to avoid even looking at this one this week, unless we break out of what would be a W pattern. And at that time, we could have our support right over here at this close of 99.63. I've got a broker alert set for that, so that could actually maybe spark my interest, but I'm not really interested in trading up to that low probability at this time type of trade. Visa, Visa's traded in line pretty well with the fall targets I had, but it's kind of been a pain in the butt in consolidation, and then when it does bounce, it bounces pretty well, so that if you're not getting out of puts at the exact time you should, it's kind of hurting you. I think this one could make a little more up move, maybe up to a failed trend line or this 208 area. I'll be watching those areas for a potential puts play on 195 puts. Depending on when it makes the move, it could be November, could be December. I haven't decided yet. I'm still studying up on it a little more. But I need to see what the markets allow in general over the first day to 3 days of this week because, plain and simple, last week I said we needed to have a short-term approach to our trading. And thankfully to that, it worked out. The first couple days of the week were down hard. Then we had kind of a so-so day, and then we had 2 up days. And really what we were left with is, even if you would have gone short at the beginning of the week thinking too low, you would have missed your opportunity to exit. You wouldn't have made money, and you'd probably even be down by now. So we really, really, really don't want to change that mindset right now. I hate personally that I am saying to focus more on short-term trades just because I enjoy swing trading more personally. But the reality is current market conditions are telling you that that's what we need to stick with. So make sure to join us in the chat room as much as possible this week. We'll be doing our weekly webinar Tuesday night, 7:30 p.m. Eastern, as always. I've got quite a bit more information I'll be passing along throughout the day as I finish my research on it and get stuff together in a way that's formatted easily enough for people to read, and I'll get that out as soon as I can. Good luck in your trading this week, and God bless.